Next up, Chao, who is the Chief Strategy Officer at Binance, is going to speak about COVID-19 effect, the outlook on crypto markets. And thank you so much, Jin, for your patience.
No problem. Thank you, George, for having me. Given that we're behind schedule a bit, I'll try to keep my remarks short and succinct. I don't have slides or formal presentations, so unfortunately you'll have to be looking at a talking head. I'll impart some of my points with some data points I have, but overall, there's really just a few simple takeaways here that I'll try to summarize towards the end, and then if there's time, happy to take a few questions. But let's just kick it off. First and foremost, as a strategist, this outbreak is not something that corporate departments or strategy departments can and will plan for. It's certainly something that we would consider a black swan event. And I'll be the first to admit that being based in Asia and sort of seeing the spread from the early days, then over to Europe and the US, my initial reaction was not that it would come to where we are today. In fact, I thought this would be something that would be resolved a month, 2 months, maybe a quarter max. And now we're sitting 2 quarters in. We can look back on some data, see how the market has been reacting, and there's a much clearer picture. So there are crises that happen every 10 years or so: the global financial crisis, dot-com bust, oil shocks in the 70s. But we're looking at something here that's much more closer to a generational event, something closer to World War II. And when I say that, I mean what that means as far as permanent changes in industries, consumer behavior, lifestyle choices, and how we work and interact going forward. And this is likely not going to be the last pandemic we've seen. So we'll need to deal with these types of things in the future. So I think there are going to be some permanent shifts, and the immediate economic response to date are some of the things that I'll go through and why I think some of these things. So I'll start with just outlook on GDP, right? So 2020 global GDP, at best, we're looking at a global contraction of 5%. I think in the US, that's already been projected up to 10% for the US, which is the largest contraction on record. I frankly think some of these numbers are pretty low, and I'll explain that in a moment, because what that represents is about a $4 trillion decrease in global GDP. And that does not quite match with what we're seeing on the quantitative easing side. And I'm talking about these because it does relate directly with what we'll see in crypto and what the implications are. So when I talk about some of these permanent dislocations, what it means for jobs for students, current workforce, particularly the trade among physical goods. We're going to see some industries that are never going to recover from this, and some that are just going to disappear completely if they don't pivot. I think what we are learning out of this from an organizational standpoint is the resiliency of decentralized organizations. So the types of companies that have been very quick to adapt to a work-at-home environment, adopt some of the communication tools that we're using right now as we speak, and be able to conduct business virtually are obviously some industries that are going to thrive. And luckily, Binance and many of the projects in crypto are among those. So I think those bode well for the general organizational structure and sort of governance structure of crypto. The idea of DAOs, decentralized autonomous organizations, I think will find a little bit of mainstream traction through all this, and I think that bodes well for the industry, and that generally supports sort of the ethos of blockchain and crypto overall. So just from a context setting standpoint, I'll start there, and then talk a little bit about, now that we're 2 quarters in, what have we seen? So we started off the year on a slight bull run, and I'll sort of caveat that term a bit, because I still think that we are in the 4th cycle of Bitcoin or the industry largely. So if you look at the major corrections that have happened, I think one in 2011, one in 2013-14, and the last in 2017-2018. I don't think we've suffered a severe correction since. We have seen things come up and down about 50%, but it hasn't been sort of that 80-90% plus correction we have seen in the past. So we're still in that fourth cycle. So we're still, but we started off the year in a slight bull run. I think started around 7,200, peaked around 10,500 mid-February. And we saw a big tank across all markets, traditional and crypto, in early March. And I think that was really a reflection of some of the uncertainty of the virus spreading globally and different paces and how different governments were responding to managing that. But we have since recovered very quickly by early May, back up to 10,000. And since in the last couple of months, remained relatively steady. And in recent weeks, you know, observers will note that we've been on, again, another bit of a run. I just saw today's high. I think we're close to 11.5, which is a high for 2020 at least. Similarly, we've seen a lot of setbacks actually in the altcoin market last year and going into this year. But we've seen a pretty major resurgence in a lot of the altcoins across the board, and particularly so in the last 4 to 6 weeks. So I think that bodes well for products and services like IEOs and ICOs. So I imagine that if the current market conditions continue, fundraising may be a lot more robust in the second half of 2020. And so what's happened that has sort of caused this? And I'm not going to sort of claim to be the expert on the cause and effect here, because if I were, I could probably be doing a lot of other things. But basically, you know, the virus is still accelerating in many parts of the world. And so that's forcing continued restrictions on movements. That's no surprise, but that's severely impacting physical trade. And the reason why I focus on that is because that's everything from manufacturing, retail, supply chains. And that's really where this global contraction is coming from. And what that's triggering ultimately is this quantitative easing that we have not seen really since the baby boom generation. So in the past 6 months, $6 trillion have been printed, 2.5 trillion alone by the US. And so just to make some comparisons, how does that compare to the 2008 financial crisis, which was largely considered one of the largest financial crises since the Great Depression? At that time, in the first year following the financial crisis, the US had only eased, done quantitative easing about 1.5 trillion. Now that's continued on for many years. So the year after that, by late 2010, it had reached 2 trillion. By mid 2013, we're at 3 trillion. And by late 2014, 4 trillion. So believe it or not, it actually took 5 years of quantitative easing to help help much of the world recover from the financial crisis. But that was in total $4 trillion over 5 years. We're now at 6 trillion globally in 6 months. So if you extract that out, these are some pretty frightening numbers, and I'll actually point to some of the bigger numbers towards the end. There's no indication of anything changing, at least for the rest of 2020. So I'm under the assumption that we'll be working and living under the same conditions for the next 6 months and probably well into 2021. Even if a vaccine is available, it's still got to get distributed. So that's going to take another year. So we're likely in this situation for another year and a half, in my mind. What does that mean for the markets? So as I said, the pros for crypto here as a non-physical asset, retail, travel, F&B, manufacturing, these have all been hit hard. What's really done well is gaming, content consumption, and trading across the board. So Binance certainly has been a beneficiary, as have many of the projects that are listed or even in a position to be listed, which may or may not have been the case 2-3 quarters ago. Binance has had record volumes. So year to date, we've had the largest quarterly burns over the first quarter and second quarter. So that's publicly announced, and you can kind of do the math there. But we're seeing both spot and futures volumes at record highs. Whether or not that'll continue on for the rest of 2020, maybe we may see a little bit of stabilization, particularly if this continues and people just sort of fall into, this is the new, which everyone is still defining. There'll be a little bit of stabilization there, I suspect. The cons for crypto are this is obviously has real impact on people's income and overall welfare. So disposable income is going to take a big hit. Speculative trading may lag as far as being impacted, but things like remittances, payments, and more day-to-day applications, the users with those applications are probably going to get hit fairly hard. And so those are the cons for crypto, is that at the end of the day, there is going to be less money or less purchasing power. And it depends again on how the QE is distributed. I think if I look at some of the policies, they're heading in the right direction, so that may help, but we'll see. The other thing I'll mention is that one of the impacts too with everybody staying at home is that crypto really supports the case for a global economy. And with people sitting at home, you're looking at more and more localization. We're taking some steps back from the global economy, frankly. So the money is now, the transaction is now being accelerated. The velocity of money, excuse me, is much more local now than it is, and perhaps regional than it is global. So that will then kind of take the focus away from some of the bigger picture goals that a lot of folks in our industry are promoting. So that now what sort of will happen? And I guess this is sort of the million, billion, $1 trillion question. There is the quantitative easing that's happened makes a great case for crypto. Look, the birth of Bitcoin was really as a result of the global financial crisis in 2008. And again, like I said, the quantitative easing amounts there over 5 years were less than what we've seen globally in 6 months. So if the case was strong for Bitcoin after the global financial crisis, it's going to be an order of magnitude stronger coming out of this. So over the long term, unfortunately, this makes a great case for crypto. It's a painful lesson, unfortunately. I do think that what we saw in 2017, 2018, that run up, that bull market, we are starting to see some signals of that. I actually made a prediction publicly last July about what we would expect to see in this fourth cycle. A lot of that was misinterpreted as me making predictions for 2019. That was not the case. I was still making a prediction for this fourth cycle, which is still probably a year or two away from being fulfilled. But in that case, I do see a potential run up for Bitcoin well into the 50, 100,000 range. I'm not supposed to be saying it, but I'll just repeat what I said publicly last year. Will that happen this year? Probably not. Next year, more likely. Year after that, much more likely. And then what are some of the triggers? Well, I think first and foremost, humans and goods need to start moving again. So some of the travel restrictions need to lift. I think we're starting to see a little bit of that in some pockets in Europe. I would hope that we start seeing that in Asia by the end of the year, but again, no indications of that whatsoever. And then I think what we're seeing in the Americas is just really, really impeding that, unfortunately. So until things get under control there, you're going to just see at least global business travel still largely ground to a halt. So that's going to be the first trigger. When you start seeing people move again, that will be a good sign. And then, as I mentioned earlier, on the altcoin market, I think market conditions have been improving very, very quickly over the past 1 to 2 months. And I do think that that'll also be a leading indicator for another nice bull run in crypto for the second half of 2020. Then on a larger scale, what does COVID do for crypto globally? We're still at 0.2 to 0.3% global penetration, and that increased in order of magnitude during the 2017, 2018 run. So I do think by the end of COVID, we'll see something similar. It will go up another order of magnitude, but it won't get us yet to a mass adoption tipping point of around 10%. I still think we're going to be an order of magnitude away. So if we can get to 1, 2, 3% global adoption as a result of a lot of the macroeconomic forces in play, that will be, I would expect something like that. And then finally, I wanted to talk a little bit about why I think it's important as we make this comparison of COVID to something as generational and impactful as World War II. It's because there's today about 180 fiat currencies traded by the 195 recognized countries, recognized by the UN at least. World War II just redrew maps and economies overnight. And what we saw is between the 50s, 60s, 70s, 80s, and 90s, 100 new currencies. So of the 180 currencies today, 100 of them came post-World War II. And in fact, like 30 of them, if I remember correctly, are just in the past 30 years. Not many since 2000. But from the 80s and 90s, there's still quite a number. So that it's an interesting stat to look at. And then the other thing that I will mention before I go to some questions is just what the overall quantitative easing means for us. So when I say, $4 trillion during the global financial crisis and $6 trillion this year, like, what does that really mean? And so I'm going to squint a little bit here, but the U.S. dollar money supply currently stands at $15 trillion. That was a 2018 number. So adding $6 trillion this year means that effectively the US dollar supply has gone up 1/3. Now that's global quantitative easing. So the US dollar bit, I think, was about half that. So you're still talking about a 15% increase in US dollar circulation. That's massive. And by the end of this, I imagine this is going to continue for quite some time. So I think at the end of this, we're probably looking at a 50% increase in the amount of US dollars out there. That's a huge injection to the supply. And then the other thing I'll talk about is the RMB, because I don't think many people realize this, but over the past 10 years, RMB supply has gone up from $20 trillion to $40 trillion. So if you imagine a similar proportion of quantitative easing, just add those two currencies together and you're at 60, 70 trillion dollars. So these are massive numbers. People are going to feel the pain to their purchasing power. There's a reason why in the U.S. The last couple of generations have not been doing as well as the prior generations. It's largely because of this financial engineering, and crypto will continue to make a case for this. Those are really the summary points of what I think COVID is triggering right now. And I'm happy to take questions from the audience.
Excellent. Thank you, Jin. So we have a question from Kane. When do you think crypto will start moving away from speculation and more into utility?
Yep. Well, that's an easy one for me. That's when we get 10% adoption. We're not at 10%. We're 2 orders of magnitude away from that. I don't know what that means in years, but I will say it took smartphones 5 years to go from 1% to 10% penetration. So at 0.23%, can we get to 2-3% in the next 5 years? I would think so. And then how quickly do we go from there to 10%? Hopefully it's single digit years. So I think actually in the next 5 years, maybe we get to full 10%. And I think that's when you start, there'll always be speculation. So that'll always be a piece of, but it will no longer be the primary driver at that point.
Okay, another question from the chat. How do you see the exchange landscape evolving in the next couple of years? For example, centralized exchanges versus DEXs versus P2P liquidity.
Yeah, that's a good question. I don't have a great answer for that. I do know that we would love for the world to move towards DEX. I don't think, again, we have the critical mass for that yet, but you know, I think the centralized exchanges are still trading volumes 2 orders of magnitude higher, if not more on some days. So I would have thought we'd see a little more consolidation among the centralized exchanges this year. I do think that COVID has impeded some of that. So I would expect that once we get through some of this, you'll see some of that down the road. I think there's always going to be a place for, similarly to the traditional markets, there'll always be some very large and significant regional players. But I do think in crypto, there'll be a lot more, a bigger role for a global player. And I think actually you may see that in the traditional markets where you see more securities markets consolidating as well. We've already seen that under some umbrellas. But to answer your question on the DEX, if you're asking for a time frame, I have no idea. But if you're asking if I think it will head in that direction eventually, yes, I do.
Okay, cool. All right. Well, thank you so much, Jin Chao, Chief Strategy Officer at Binance. Did you want to get in any final words?
No, I mean, thanks for having me. I usually like to have more of an interactive audience. So I'd love to know, who owns crypto, who doesn't own crypto. But given that we're in this forum, I'll just leave it at a thank you to everybody.
Thank you so much, Jin. Go for it.
George? Yeah, Stefan here. Hey, Jin. Yeah, just when you were mentioning, what's your view on all the money being printed in China and the US and now in Europe as well? I think you mentioned, 60 trillion in terms of renminbi, in terms of US dollar, as well as euros going into the market. What's your view on that? And then the monopoly situation that currently each of those governments have with money, and then the whole modern money theory, right? So can they just pull that away when prices start going up and inflation comes in, or because it's all digital, can they sort of play around with that a lot more and a lot faster? What's your view on that?
Well,
and I own
so
crypto.
I think there's a few questions in there. I'll address first. So first of all, when I said 60 trillion, that's the combined money supply of RMB and US at the moment. And I expect that will increase dramatically, 25% plus, due to what's happening with the pandemic. I think your question around so the US is printing money really as a form of relief. China over the past 10 years has been printing money in order to maintain a relative peg to the US dollar, right? So that there's not too much volatility. I think if the RMB were to float and they weren't printing like that, you'd probably see RMB at 5 to 1 instead of, I think today it's like 7 to 1 or 7.5 to 1. I haven't been following. So they've been printing to maintain a relative stable exchange rate. US has been printing to ease some of the financial burdens caused by the financial crisis and now this. So two different reasons. Your other question around central banks, could you repeat it one more time?
Yeah, it was more like even though they're printing to sort of sustain their economies for whatever reasons, I sort of, with this whole, because it's all digital now, and they have a monopolistic situation where the governments actually own the money and the distribution of the money, because it's all digital, can they just immediately retract the money in order to do the opposite versus just printing?
Oh, sure. You're just talking about reducing money supply, of course, and that's happened. But generally, governments don't like to do that because they don't like to see prices go down. And so there's this sort of inflation's an evil word, but deflation is sort of like political suicide. And so that's why you rarely hear about the the money supply shrinking, but it does happen. But I think the primary point here is, should central banks be allowed to own that money supply? And I think that's, that's kind of why Bitcoin was born, right? The thought is that that should not be in their power. You can give them the interest rates as their primary monetary policy, but to control the supply of that in a global economy is really a bit of a fixed game, because you have tons of countries that are reliant on other. So a lot of countries that tend to adopt crypto first and foremost, and are most forward-leaning in their regulatory frameworks, are generally countries that are pegged to the U.S. dollar and don't have central bank sovereignty. And so the next step is, okay, is it worth giving up central bank sovereignty to reduce friction, trade friction, and come up with a more unified currency? And there was a good case study of that 20 years ago. It's called the euro, right? That took the place of a dozen different currencies. And so that's sort of the trend that we'd like to see continue, but unfortunately, the con of this pandemic, as I mentioned, is that things are now localizing and money's being traded more locally. So there's less of a case at the moment for that, but we'll get back to that at some point.
Yeah. Thanks.
Yep.
All right, then. Thank you so much, Jin. I found your talk very, very interesting.
Thank you.
Thanks.